Good afternoon, everyone, and thank you so much for having me here today to go through some of our key macroeconomic views and just to take a peek into how we view the world. A couple of years ago, I would say that it was quite easy to neatly box economics and neatly box geopolitical outcomes separately. So it was quite commonplace for financial markets to react to things like a job sprint from the United States, CPI data with regards to price pressure, or even something like GDP, which we know is lagged. But today we're starting to see that markets are also starting to respond to geopolitical risks. So when we have an announcement by the US administration that they want to annex Greenland or they want to make Canada the 51st state of America, we're starting to see that financial markets are also responding to some of these geopolitical tools that are coming out of the global economy. And so it's been against that backdrop where economics is now operating in an age of political noise, and it's become very difficult to tease apart the two. We've also ushered in a new world order in which the global operating system that underlies the underpinnings of the global economy are now starting to reset in quite a dramatic way. And it's in this kind of environment that we are starting to see that America is also sitting up and re-looking at their strategy and positioning in this world economy. So today on the agenda, we first of all going to look at why America needed to reset their economic and foreign policy agenda in this new world order and how it influences the rest of the global economy. Secondly, we're going to talk about what I call the rise of the rest. So, quite often people think about the US policies, especially when we only looked at protectionist policies, as being a bit of a zero sum game. But we heard very clearly out of the World Economic Forum in a key address by Mark Carney, who's the Prime Minister of Canada and a former BOE head, basically told us that as a middle power, you can actually emerge advantageously in this environment that is now shifting to a new world order. The third topic speaks about American exceptionalism. And we've often heard from investors, America, are they still exceptional in a number of facets? We think that this is still the case, but it is evolving. We'll also chat a little bit about democracy being in retreat. So, a couple of years ago, you would have heard economists saying that one of the key risks to the economic and political outcomes globally are that we start to get more strongman leaders that are at the helm of politics. But that's no longer a fringe risk. We now have populist leaders that are firmly sitting in the driving seat. And then, as number 5, we'll take a peek into the crystal ball, looking at some of the key macroeconomic scenarios we think can play out in the world economy with their respective geopolitical backing, and have a look at which scenario we think is more likely and how to basically invest in that kind of world. So, on the US's strategic repositioning, we've seen that the economic outcomes and foreign policy outcomes are starting to be repositioned by America. They've realized that if they don't do that, they are going to see further losses being entrenched in their citizenry. And one of the reasons that they woke up to this reality is that they found that the Western model largely failed citizens. Democracy promised to take citizens along with it and increase the living conditions for many around the world. But in fact, democracy has failed many citizens. Now, why has the Western model failed? I think in large part because it did not produce enough middle income jobs. And so we started to see inequality picking up in many nations. We also saw that governments, by and large, ignored large demographic trends to the extent that we're sitting with Europe that has a very underfunded pension system for a very large cohort of the population. And lastly, because of that inequality, we also saw a world in which we have the political elite and the rest, those that have been left behind. And this is essentially why people were so angry in 2024 when they voted at the polls. It was one of the biggest election years we've had in history, because citizens were looking for a political alternative to center left and center right politics to solve for things like the cost of living crisis and to deal with immigration in a manner that was much better than the current incumbent governments in these Western democracies. The result of that is that many of those incumbent democratic leaders were voted out and replaced by more populist leaders. They are now taking the baton over. They've inherited the problems of the cost of living crisis, of the immigration issue, of high debt levels, and of geopolitical risk. And the jury is still out as to whether they will be able to address these issues within their time frame that they are at the helm of the political scenario. We also see that the post-war liberal order is starting to unravel. We were very used to a world post-World War II where governments started to cooperate quite a lot with one another on issues that affected the world economy. So think about climate change, fiscal and debt dynamics, even something like health outcomes following the COVID-19 pandemic. But I think that most of these issues are now largely behind us, being dealt with in a multilateral setting. We now have huge political polarization that exists in economies like America. And that makes it very difficult for politicians to address things at a global scale when citizens want them to focus on domestic-led priorities. Now, this chart looks at government stability and how it shifted since the end of 2020. And what's quite interesting is that if you have a populist leader in place, it doesn't necessarily mean that you get penalized on this measure. You get penalized when there is no definitive outcome on the political situation for the next couple of years. And so if we look at America as an example, there's a bit of blue there saying that there's actually less instability in the American economy than what there was at the back end of 2020. So love him or hate him, Trump has actually delivered on his electoral mandate, and he has actually ushered in a period of political stability for the next couple of years. Where are we seeing the opposite? So we're seeing the opposite in Latin America, where there's a fair amount of pink and orange on the chart, suggesting that there's more government instability than before. Now, in Latin America, they put their trust into left-wing governments who failed to deliver on these socioeconomic outcomes, and now citizens are turning firmly to the right. If we look at Europe, also quite a lot of pink and orange on that chart. So we have the issue in France, where Macron is now the least popular president in 50 years. We have the UK with Keir Starmer with a popularity rating of only 18%. We have the case in Germany where there's far more support for the Alternative for Germany party, a far right-wing party. In addition to that, or maybe because of that, we've had very weak growth outcomes. So in the last 64 quarters, we've seen that Europe has struggled to grow above 1.5%, 2%. This is in stark contrast to the American economy, which continues to surprise on the upside when it comes to the growth figures, even for the fourth quarter of last year, where there was the longest shutdown in history. During Trump 1.0, Trump's main gripe with the Chinese economy was the extent of the trade deficit imbalance that existed between America and China. In Trump 2.0, this has now morphed into more of a trade tech war with China, on the basis that there is a huge global race to be dominant in this space. And what is important for this AI boom? Resources. So when I say that that global operating system has been rebooted, it's almost like we're loading up the 1.0 version of it, because we're going back in time to the pre-war era where resource imperialism was important. So we are again in that age where if you have things like oil and rare minerals in your economy, it serves you well. And if you don't, you need to partner with another economy in order to gain those advantageous benefits. Now, on this chart, you can see that China clearly dominates when it comes to rare earth minerals, particularly when you look at the hard rare earth minerals important for certain aspects of technology. And even by the time we get to 2035, it's going to be very difficult for other countries to displace them. And this is one of the key reasons that we've seen Trump turning towards trying to consolidate power in the Western Hemisphere. It's a resource grab for that area. So, what do Venezuela, Canada, Greenland, Panama Canal all have in common? They either are parts of strategic trade routes or have key mineral resources. And this is essentially the setting against which we are seeing this grab for the Western Hemisphere. Initially, Trump came out to punish the world economy with the big economic stick, which was protectionist policies and tariffs. But he's now started to look towards another big political stick, which is foreign policy. And I think that's largely because the protectionist stick has run its course. It is now starting to hurt the poorest consumers in America, where real wage gains are actually now in negative territory. And Trump knows he needs the support of these voters when we go into the US midterm elections in November. So, as a result of that, we're seeing a bit of a change in tactic out of the US administration with quite a big focus on foreign policy. And again, that global operating system that we're rebooting, quite cognizant of what actually happened in the past. So, again, almost going back to that 1.0 version of the Monroe Doctrine, which was essentially a period in 1823 where a group of American leaders came together to say that we need to become more interventionist in our own backyard and consolidate power here. And we don't want European influence or interference, and we will do the same for Europe. And so we all heard that speech by J.D. Vance at the Security Council last year, and very rightly so, because the US has actually paid about 60% of that NATO funding, even though there are 31 other countries. And under the so-called Trump doctrine, or Monroe Doctrine as it's been dubbed, they are wanting to move back into that age where there's very little European influence in America, and they start to consolidate power in their own backyard. The rise of the rest, and this is really referring to the middle powers. Now, by its very nature, middle powers don't have the same economic heft and military stance that your superpowers do. However, the global superpowers need the middle powers in this new world order because they have something that they want. It's either a strategic trade corridor, some political influence, a big population like India, or mineral resources and energy, which we also know is very critical for the AI boom. And so we're starting to see a bit of a shift in the economic center of gravity to a world where middle powers are starting to gain in prominence. Now, if we had to look at the period between 1946 and 1960, this was essentially a period in which Western democracies did quite well on the back of those industrialization gains. So they really dominated in tech, in GDP, in output, in labor, in ideas across the global economy. But if we have to go back to the global operating system in 1.0 back in 1820, you'll see that the influence from emerging markets was quite big. Fast forward to today, and you can see that the influence of those economic titans are now coming back. So this new world order looks a little bit like the old world order. And this can be clearly illustrated in a picture called the Valle Reprieris Circle, which is a small circle on the surface of the global economy. It makes up about 2% of the total surface, or 8% if you just look at the land mass. And the importance of the circle is that there are more people living inside the circle than there are people living outside of that circle. We've got the Strait of Malacca that runs through that. That's almost like a key jugular vein of the global trade route system. And we've also got some heavy economic populations here. So the Bangladesh, Indonesia, China, India also residing here. So we were in a world economy that got very used to wealth being embedded in the Atlantic. But that key focus is now shifting to the Indo-Pacific. We know that this circle represents quite a large number of people, a very small part of the world economy, but it definitely punches above its weight in terms of its economic heft. What has yet to catch up is that people still need to get richer on a per capita basis, and this is likely to continue over the next couple of decades. Now, if I was standing here a year ago, and I was going to tell you that we are probably going to have the highest tariff rates that we've had since the 1930s, which we do now based on the data in this chart. And if I told you I think economic growth in 2025 is going to be 3.3%, I probably would have been laughed out of the room given the negative impact on protectionist policies and what they can do to overall economic growth. But we actually saw from the International Monetary Fund that growth is likely to have printed at 3.3% last year, in spite of the protectionist policies that came about. So the death of globalization has been greatly exaggerated. If we look at trade as a share of GDP, this ratio has gone basically sideways since 2008. It hasn't collapsed in a heap. Why is this the case? So we did have a big pickup in the rise of protectionist policies, but at the same time, we also had a big pickup in the rise of trade liberalizing policies. And so this was really a kick that the European economy needed from America. We've seen old trade agreements that were started 25 years ago, like the Mercosur agreement, now being dusted off and re-looked at. We've seen that India has done 4 key trade deals in the last year. We've seen that China is also starting to reorient their trade. So foreign direct investment in China in the first half of last year has now surpassed the US for the first time historically. China also found a bit of a loophole. And so essentially, Americans were importing Chinese goods that went via Vietnam, Bangladesh, Kazakhstan, just to have another label added. And it came in with a different passport, but didn't come in with that Chinese-related tariff. And this is why China still managed to grow at quite a healthy rate of 5% last year, with one of the key economic drivers being export growth. Many investors continue to argue about whether or not America has retained its exceptionalism. I think they have in a sense, but it is evolving and doesn't quite look like what it used to in all senses. From 3 aspects, I think America is still leading. Number 1, on dollar dominance. Now, we've all heard about dollar de-dollarization, and that is true when you look at the global foreign exchange reserves that are held by central banks. The dollar made up about 70% of them at the turn of the century, and today it's sitting at around 56%. But at 56%, it is still the largest chunk of global foreign exchange reserves. We also saw over the course of last year that the US dollar and the US Treasury didn't typically react like the normal safe haven asset class that it used to. But that's not to say that investors around the world have lost faith in all US assets. And so the chart on the left shows you foreign holdings of various US securities, and the red line is Treasury debt or US Treasuries, and you can see that has come down. So in 2008, 1 in every 2 treasuries was held by a foreigner, and today that has moved to 1 in every 3. So they have sold out here. But when you look at some of the other colorful lines on there, you can see that foreign purchases of other US assets have actually held up relatively well over this period. On the right-hand side, you can also see that the US dollar really does punch above its economic weight relative to the world economy, above its trade weight to the world economy. Outside of its holdings of foreign exchange reserves, between 88 and 90% of cross-border transactions globally are still done in the US dollar. For countries that have externally denominated debt, a very big chunk of that is still dollar denominated rather than euro or renminbi. So unless we find an alternative that has the same legal enforceability, scale, or depth, I do believe that the dollar will remain the world's reserve currency, although we are going to see a gradual depreciating dollar over time as the dollar loses its independence and markets lose the credibility of institutions in America. We have, of course, seen quite a big move into gold. But I think this is more of a hedging rather than a replacing story. And so when we look at gold reserves, we know that central banks around the world now hold more in gold than they do in US treasuries. On this chart, you can see that most of your developed market central banks have quite a big holding of gold already. And the ones that have to catch up are essentially your emerging markets outside of Russia. Now, between 40 and 50 is your level at which having more gold is not going to benefit you from diversification. But you can see that that red line is still quite a ways away from that 40 mark. So that means that there is some structural foundation and underpinning to support gold in the next while. Secondly, America is still exceptional when it comes to their military prowess. So most countries can have a war with their neighbor. They've got enough military and defense systems to do so. But America can have a war with anyone because they've got a presence in 90% of the world's locations. And that's what they call the lily pad military formation. And so they've got a key lead here. America is set to spend between 840 and 850 billion US dollars. That's nearly $1 trillion US dollars just on defense and the military system. This is equivalent to the next 8 to 10 economies that are spending on military in the world economy. So they still have quite a big lead on the military side. And we've seen that out of America, they are now taking a far more interventionist approach in their own backyard, but they're taking a far more transactional approach with other countries like Europe or China. The third element where America is still exceptional is around its key innovation engine. Its university graduates, its outcomes on biotech, space exploration, and of course, software. And when we look at software spending for the US for 2025, the US comes out as number one here. The next one in line is the European Union, and they trail back quite a bit. Now, of course, we know that the biggest IT supplier to the rest of the world is India. But on this measure, they only come up as number 8. Democracy in retreat. Now, we've seen that there are more and more populist leaders that are in the driving seat in many of the world's economies. Along with that has come some political interference. So we were quite used to a world in which we had the invisible hand of government. But we've now moved into a world where we have the very visible thumbprint of government. And this is government intervention starting to come and take root in economies like America, where institutions had very deep-seated democratic norms. And this is essentially what made developed markets a safer bet than emerging markets. This concern is now starting to creep through and starting to taint the nature of America and assets there being safe haven in nature. We've seen that Trump's agenda and the scope of it has just expanded, where executive control has now whittled into all facets of the US administration. We're seeing quite a big, heavy hand in areas such as the Federal Reserve, the Treasury, civil justice, even the media. And this, of course, has been one of the reasons that the US dollar has continued to depreciate. A quick note on the Federal Reserve, because I do believe that independence for the Federal Reserve and central banks in general is very critical. So their key mandate is to protect employment outcomes and to ensure that they protect purchasing power for consumers. But if you are wearing a political hat, it's quite difficult to make those decisions. So will you actually raise interest rates when inflation is getting out of control? Probably not, because that's going to make your shorter term growth outcome suffer. But of course, in the longer term, your consumers are worse off. And so this is really why we do need Fed independence. I do think another check and balance is coming into play, and that's going to be from the bond markets. And we saw a little bit of that with Liz Truss in 2022, and again with the tariff issue in April of last year. Bond markets are saying you can no longer kick the debt can down the road. We are going to demand a higher premium. And so going forward, I think we're going to probably have scarcer capital, more expensive capital, and capital is going to become far more discerning between the good credits and the bad credits on an economic scale. Now, usually you would think that people that live in an autocratic society probably don't trust government all that much because of issues around transparency. But this chart shows that it's actually the opposite. So people that live in a democratic environment actually have the least amount of trust in government, again, because those democratic benefits have not infiltrated to all citizens. We're also seeing that the institutional issues embedded in America's key institutions is becoming a key factor in financial markets. And it's not just the Democrats that believe that there's more political interference in the key 9 institutions in America. You're also seeing a loss in confidence from Republican voters. So, where to from here? I do think that globalization is not quite dead. The world is reordering, and we are seeing a reorientation of trade. And in that world economy, there are 4 key scenarios that I think can play out. The one that I think has the highest probability is a managed multipolarity. So we've got different poles of power, middle powers also benefiting from this new world order. The dollar remaining the world's reserve currency, but because of political interference, starts to depreciate at the margin. It's an environment in which multilateral institutions realize that they have to change because domestic policies need to align with multilateral goals. It's a world economy in which growth continues to chug along, inflation outcomes are reasonably moderate, and so are your policy decisions. The second key theme is divide and conquer, where we have 2 key poles of power. So that US China nexus coming back into play. It's a very volatile environment, and we have to actually choose sides between a US and China. But this one will have, the most touch points with geopolitical risk. Global fragmentation, we have, again, multiple poles of power, but different currencies operating, a very volatile environment. Inflation gets out of control, interest rates have to go higher in some cases, and of course, then growth suffers in many jurisdictions. And then a sudden crisis is something like a hard landing in China, or the US fiscal cliff finally gets reached. And this is something that happens quite quickly over the period of time. And something like gold would then be a key base for a safe haven currency. So, how do economies play in this kind of world environment, this new world order? Strategic plurality is something that's going to come up more and more. Now, I think we often think about having, one relationship with one country for trade and security and benefits. But look at in India. They champion the voice of the global south. They're going to host the G20. They're part of the BRICS alliance. They have a key relationship with Russia on energy and the military. They're starting security deals with America. And this is essentially the world economy that we are going to play in, with power politics really firmly coming to the fore. Lastly, how do we invest in this kind of world? We're going to see far shorter, sharper cycles, more volatility, an environment for stock picking. Diversification, very key in this kind of climate. We also think that real assets will benefit in an environment where inflation is continuously questioned. So, infrastructure, raw materials, especially in a world where resource imperialism has now come back to the fore. We also think about things in terms of themes. So, military or energy, rather than just looking at it from a US versus Europe call. And then lastly, on higher debt burdens, I do think that capital is going to become far more discerning. So it's very important for a country like South Africa to get our economic reform chugging along, to get our fiscal house in order to attract those flows in a competitive global environment. I've got one final slide that I'll just leave up here, hopefully to prompt some questions. I thank you for your time.
In your presentation, you talk a lot about America, and in fact, it's so hard to determine what's America and what's Trump. So American policy, Trump policy seems to be exactly the same thing. What happens post-Trump? Is the US strategy going to remain the same? Do we have to, is JD Vance and Marco Rubio also just going to carry on with Trumpism?
I think, Ray, that's a big question in the room, because we think a lot of the policies have come with Trump, but it's policies that the people in America want. We've got a highly polarized society in America. And in some cases, both Democrats and Republicans believe that what Trump is doing is right. So both Democrats and Republican parties don't like China. So an anti-China stance is likely to persist. Controlling the Western Hemisphere, we saw quite a lot of support from Democrats as well during the Venezuelan issue. So I think some of these policies will continue even beyond Trump, simply because of the extent of polarization that we're seeing in America. I think in some cases, some of them will soften, like the transatlantic relationship between US and Europe has been, a long-standing favorable agreement between the two. This, of course, came under pressure with Trump. And I think post-Trump, we may see a little bit of backtracking on that.
Okay. And what does it mean for emerging markets? Where do we fall in? And especially, I suppose, South Africa, given the fact that we, for some reason, are not liked by the Trump administration. What does all of this mean for us?
So I think we need to really accrue the benefits that we've already started putting into place. At the back end of last year, a number of issues started to come into favor for South Africa, getting off the grey list, getting an upgrade, some structural reform momentum, inflation volatility coming down. This is the era in which middle powers can actually hop onto the bandwagon and ride the economic gains. And I think India is firmly positioned to do so. I do worry that our foreign policy stance is lagging. And so, even if we do get our domestic priorities sorted out, we do need to showcase a bit more prowess on the foreign policy front because this is an age of power politics.
And I see there's a question. It's one of those yes or no questions that economists don't like asking. It's from the stage, from the audience. I'm going to ask it, but I don't expect you to know the answer. You mentioned that the US dollar is, whilst it's waning in popularity, is going to remain resilient. And then you also said that gold is going to continue. The demand for gold is going to continue as different treasuries start stockpiling. The question on the screen is gold a bubble? Apologies for asking. Yeah.
So I'm going to be the typical economist and not give you a yes/no answer, but it does depend on the time frame. So can gold get to 10,000 in the very short term? I think less likely in the longer term because these are structural issues for emerging markets want to mop up more gold because of that weaponization of the US dollar. The Bank for International Settlements says that when you get to a level of 40% or 50% of your holdings in gold, there's no more diversification benefits thereafter. And so I think that's what's going to keep a lid on gold prices further down the line. But the chart I showed you with the red line on where BRICS holdings are, it's somewhere between 10 and 20%. So it still has a way to go on a structural manner. I think obviously you'll get these short-term pullbacks as retail investors now fell out, etc. But this is more of a structural argument.
Okay, cool.